Columbia's apartment market has continually underwhelmed over the past few years, but it may have turned a corner in third quarter 2012. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Columbia update. South Carolina has been home to two of the nation's strongest secondary markets of the past couple of years, Greenville and Charleston, while Columbia has long trailed behind. But that may be changing. Columbia's apartment market posted some very good numbers in the Q3 2012 period, good growth in both occupancy and in pricing. Let's start off with the occupancy story. Columbia has long been among the nation's laggards for occupancy, with rates ranging from 88% to 92% since 2008. But finally, a big pop in Q3 2012, occupancy up 180 basis points in the quarter, thanks to demand reaching a 5-year high with 819 units absorbed in the quarter. That brought occupancy back into decent shape at 93.5%, Columbia's best rate since 2007. And when we look at Columbia's 4 submarkets, we see strong jumps across the board in Q3, but occupancy is really only in healthy shape in 2 submarkets, and they're the 2 higher rent areas. Occupancy at 97.5% in the key Central Columbia University submarket, following a jump of 250 basis points in Q3 with the return of college students for the fall semester, and occupancy at 95.6% in the key suburban area of Lexington County. The real weak spot in the metro remains Dutch Fork, an area that's densely packed with aging, more affordable apartments. Let's also look at occupancy by product age, and we see a clear bifurcation by that measure as well. Very strong rates in apartments built in the 1990s and the 2000s, 95 to 97%, and decent in the 80s at 93.9%, and ugly in that 70s segment, just 88.1% occupancy. And of course, this is a pattern that we see in a lot of southern markets, with far more vacancies at the bottom end than at the top. And we'll switch gears and talk about rents. Same-store rents jumped 1.3% in Q3, and they are up 3.7% year over year. That puts Columbia above the national average of 3.3%, and it's the largest height that Columbia has seen in 5 years. When we look at submarkets and product age groups, rent growth hasn't quite correlated to occupancy rates. I'll highlight Central Columbia University in particular. Rents there up just 2.1% annually, despite so few vacancies. Now, Lexington County did see a pretty good pop. Rents up 5.7% there, and among product age groups, all were right around 3 to 4.5%. So all in all, improving numbers in the Columbia apartment market, but it still trails behind its in-state peers of Greenville and Charleston. Similar numbers in both of those spots, occupancy right around 95% and rents up around 5% year over year. And those aren't blips. Greenville and Charleston are putting up good numbers for much of the past 2 years. And looking ahead, the big question for Columbia is whether those Q3 numbers were a blip or a sign of good things to come. And we're cautiously optimistic. The local economy is showing some good progress of late, and apartment construction should remain pretty minimal. So occupancy in Columbia should continue to tick upward, and rent should climb moderately as well. So that wraps us up for Columbia. Until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.